Attention buyers, I'm talking to you today. Today we're going to talk about ARMs. Not these kind of ARMs, but adjustable rate mortgages. So I've heard a lot of people concerned about this unexpected and more rapid increase in mortgage rates than we had planned for. So at the end of 2000, I've talked about this. There's a video if you want to go into it about the rates and stuff, about the increasing rates and things like that. But towards the end of 2021, we anticipated a rise in interest rates in 2022. All of the projections were that by the end of the year they would be at about 5%. Well, they were at 5% by February. So this kind of rapid increase in rates has really startled some people and maybe changed different folks' buying power. So there's a lot of misconceptions out there about types of mortgages. Like, first of all, you don't necessarily have to have 20% down. Not all mortgages are conventional. There's different government-backed mortgages, but today specifically, I'm going to talk about an ARM loan, and that stands for adjustable rate mortgage. Now, don't panic. That doesn't mean that it starts adjusting right away. I'm going to go into a little bit of how this works and who it might really be good for. So how an adjustable rate mortgage works is there's a certain term of the loan that the rate is fixed, and that rate is fixed at a lower than market rate. So let's say hypothetically, right now, market rate for a 30-year fixed is 5.5%. You could theoretically get into an adjustable rate mortgage loan at 4.75% for a certain fixed amount of time. That amount of time varies. The most common adjustable rate mortgages are 3, 5, and 7. So you'll hear the term 5-1 ARM. What that means is for 5 years, you are fixed at your entry rate, and then after that 5 years, the rate adjusts annually at a certain percent, and then they always put a cap on it. So within the terms, once it starts adjusting, it can only adjust so much per year, and it can only go up so high of an additional percentage rate. So that scares people, though, and I completely understand why. But let me break this down a little bit. So a lot can happen in 5 years. First of all, you can refinance it within that 5 years. If it gives you more buying power now, and especially if you know that your life will be very different in 3 to 5 years. So let's say you're a first-time home buyer, and you really just kind of want to get in, and you are at a certain price point in December of 2021, and now your price point has changed because the interest rates are different. This might give you a little bit more buying power, knowing that on average, first-time home buyers don't spend anywhere between 3 and 5 years in their home. Very rarely do first-time home buyers spend any more than 7 years in their first home. So if you are a first-time home buyer, and you know that chances are within 5 years you're going to be trading up into your next home because your family grows, or because your career grows, or because you know that you're going to be here maybe for 3 years during your residency, but then most likely you're going to be going somewhere else. You have that fixed rate for that, probably the life that you're going to own that house, and that fixed rate is going to be lower. Now, if your life doesn't change the way that you anticipated it, and it looks like you're going to be in the house for longer than that fixed term is, 3, 5, 7 years, whatever it is, you can always refinance it within that time period. And then go into a fixed rate. Or if something really changes in the economy, let's say all of a sudden something happens, like, I don't know, let's not say the P word, but something happens that the rates drastically drop, and you want to fix it in at that lower rate, you can always refinance it. So ARM loans really give you a very good opportunity to perhaps increase your buying power with very, very little risk. Now, if you are maybe looking for your forever home, maybe you're established with the size of your family, and you know you're going to be in there for a while until the kids go, this may not be the way to go. But if you're, say, an empty nester, or your high school kids just left, and you want to downsize a little bit, but you know that after you retire, you're probably going to be moving down to South Carolina or something, so you're looking at about a 5 to 7 year plan for that. An ARM loan could really work well for you. If you work in a job that moves you around the country a lot, but you know you're going to be here for at least 2 or 3 years, an ARM loan could work really well for you. So it's really important that you talk very closely with your lender the lender that you can sit down with face to face and talk with. I cannot stress enough how much I do not recommend working with an online lender. These types of conversations you need to have with somebody that you know does this every day in the market that you're buying in. Okay, so I cannot stress that enough. Go to your local, whatever bank you use, they're going to have a mortgage lender. Talk with your realtor. They will have recommendations for you based on your situation, what lenders they work with on a regular basis that can really kind of match you. Everybody is going to have different programs. One bank may only have up to a 5-year adjustable rate mortgage, while another bank has a professional program that goes up to 15 years. Everybody's going to have something different. But you really need to know what your loan options are, because there are very many of them. There are all kinds of ways. There's jumbo loans, there's adjustable rate loans, there's FHA loans, USDA loans, there's West Virginia housing. There are so many different loan programs, including this, that you really need to be talking with your professional so that you know you're getting the best program that suits you at the best rate that you can get. So wanted to talk specifically about the ARM loans today. If you have any questions, please let me know. I am very familiar with them, but I am not a lender. So when it comes down to it, you want to talk with your lender. But there are options. Okay, so there are ways to mitigate what is happening with this so that you can still stay in the game, so that you still have a seat at the table, and hopefully we can get you where you need to be, and that's in your new house. Cool? Thanks for listening to me. I appreciate it. I hope this was helpful. If there are any topics you would like me to go over, please let me know. I am all ears. I can't come up with all this stuff on my own. All right, guys. Have a good one. See you later.